It had been a disappointing third quarter for Malaysian retailers as sales contracted by 1.1%. This figure was way below retailers' expectations and a sharp contrast to the positive 4.9% seen in the second quarter. Retail Group Malaysia's MD Tan Hai Sin had earlier expected sales to grow by 4%, explaining that despite the strong economic performance during the third quarter, the majority of consumers did not receive higher take-home pay. Malaysia's third quarter GDP growth had come in at 6.2%, and traditionally, retail growth tracks GDP growth. 4 retail subsectors had posted negative growth. Department store cum supermarket sector had contracted by 3.5%. Department stores shrunk by 4.4%. Supermarket and hypermarket subsector was down 5.2%, while fashion and fashion accessories contracted by 4.8%. Sapura Energy Berhad bled for its third quarter due to lower engineering, construction and drilling revenue. Sapura reported a net loss of 274.4 million for the quarter, compared with a net profit of just over 158 million last year. Not helping the numbers was a lower contribution from its share of profits from JVs. Revenue plunged by over 42% to 1.28 billion from 2.22 billion a year earlier. Sapura warns that industry conditions continue to be challenging as capital spending in oil and gas continues to be low. But it will continue to focus on replenishing its order book and strengthening its position in existing markets. It added that in the exploration and production segment, it has successfulully completed its first gas development project, which will help with revenue. Its shares did not take the news kindly though, closing 20% lower at 96.5 cents. Gamuda Berhad is aiming to replenish its order book by between 6 and 8 billion ringgit for FY18. MD Datuk Lin Yun Ling said that its current 8 billion order book will keep it busy for the next 3 years. When asked about MRT3, Lin said that Gamuda would bid for the project as the opportunity arises, as it is currently fully focused on MRT2's underground works. However, Lin warns that local contractors are currently concerned about the supply chain being overstretched, adding that while construction costs over the last few years have been benign, Lin warned against being complacent. Poh Kong Holding Berhad's first quarter results were golden as net profit tripled as more people invested in gold. Net profit clocked in at 5.4 million compared with almost 1.8 million last year. Likewise, revenue grew 19.1% to 220.9 million from 185.5 million the year before. Poh Kong said the better numbers were due to higher retail gold prices and additional revenue from new shops. The group is also confident of its resilience to weather the challenges ahead, saying that it is cognizant of the current market situation, continues to review, revise and consolidate its business strategies to meet these challenges. Hard disk drive parts maker MQ Technology Berhad is going into the gaming business. This follows a marketing agreement it signed with Vivo Tower Holdings Limited to exclusively develop and implement marketing services and manpower, specifically for Vivo Tower's designated gaming and entertainment rooms in the Star Vegas Resort and Club in Poi Phet, Cambodia. To fund it, MQ Tech is proposing a private placement to raise some 4.15 million ringgit. The company said it expects a 25% contribution or more to its net profit from this diversification, which may cause a diversion of 25% or more of its net assets moving forward. It says this diversification will provide an additional source of income to weather its financial concerns. It plans to tap the Cambodian gaming industry by establishing marketing strategies to bring in the crowds. MQ Tech expects its proposals to be complete by the first quarter of 2018.